Hello and a warm welcome to my channel where I cover stocks and derivative data on a daily basis. Today's video is on TCS, the Tata flagship company and one of the largest companies in the Nifty, plus the biggest stakeholder in the CNX IT. So what lies ahead? Let's have a look at it from a investor, trader, long-term, medium-term, short-term perspective. So start with the quarterly chart because this one also deserves a look like that. In my last week's video, I had made one on Infosys. So if you want to compare and if you want to see, you can have a look at that video also. It's there in my channel. So TCS, phenomenal run from 2010, non-stop phenomenal run. But you can see out here that it's also had its share of correction each time, from an investor point of view. This was one correction, 2011-13. Then this is a bigger one out here, staggered. It's not felt that deep. This one compared to the first one is because it took the depth was not so much, but it was time-wise quite big. So nothing was happening in that and continued to go sideways before a major push. And then we had this, again, an extreme volatile zone for TCS. This is the COVID low and then the takeoff. So in the case of TCS, we do know one thing, that the corrections tend to be at times large red candles. That's in the quarterly chart, and volatile also. This is a volatile case. This was a sharp one drop case. This is the only exception of a sideways time-wise correction length one. Now, in the current scenario also, we can see that yes, it is in a correction mode out here, not yet out of the wood, but again, a large red candle was spotted out here in this case. In this one, we had two, one out here, one out here, these two. So after that, if you can look at the from an Ichimoku perspective, that since its listing, the quarterly chart has never seen a baseline violation, never. So as a long-term investor, as someone who likes to add the stock on dips, never. This correction, even the COVID correction, it's never happened. It's not even come down to breach it, except this minor touch out here in the quarterly. It just took off. That was the COVID case out here. Otherwise, it just manages to smoothly sail and an investor has no worries at all. Here also we can see till the time the baseline was flattish, it took a decline, and after that it's done a top up move once the baseline has started slanting in the quarterly chart. A closer look will get you there. There's a very minor slant, but it is there in the case of the quarterly charts. Now let's have a look at the monthly chart and try to assess what it looks like out there. Now in the monthly chart, every time the baseline has got violated, it's come down to the cloud, almost to the cloud here. This one, COVID low, did not even come down to the cloud, took off again. But this time, it has got cut below the baseline 1 month, tried to push it back for a couple of months. Then again, from March, it's the monthlies have seen it close below the baseline, which is not a good sign, number one. Number two, it's also given a bearish crossover. Now, this crossover, I will not give too much importance to so early. I'll keep it on the back of my mind because it's happened in a sideways trend. This entire process where the crossover went negative is in a sideways trend. So I won't give it right now so much importance, but I will definitely keep it in mind from a point of view whether I should go aggressive long in it or be conservative about the whole move and try to spot some kind of resistance and support. So in a monthly, I can see a resistance at 32, 32.50. It's a big one, 32, because you can see out here one candle, two candles, three candles, four, five. Five candles failed to cross and sustain above 3,200. Each time the monthly went up to 3,200, it saw selling pressure and came down from there. And right now the baseline is at 33.75. quite above it. But before that only there has been selling pressure. Even this month, though it went to 3,300 and now at 32. So this particular level is quite scary in it right now, 32, 32.50. I would say 32.50 to be more precise. One should be very worried uh, about that level. From an investor point of view, before one goes aggressive into buying. Now let's have a look at the daily time frame. In the daily time frame, if I remove the Ichimoku for a second, you can see that it has a potential. I'm not going to preempt it, but it has the potential of a head and shoulder pattern structure forming right now. Okay, so it's a very ominously placed in this the way it is being placed right now. So with the monthly resistance of 3250 around and what you call this structure, one has to be more careful going forward with the stock even in the daily time frame. Now, before I go to the hourly time frame, let's have a look at the option and futures data and try to analyze what's going on out there. My courses for Ichimoku, harmonics, and trading psychology and risk management are available. The videos and PDF with hand holding, one-on-one doubt clarification, confirmation of what you have learned, like a theory, practical assessment manner of teaching is what I practice. And those who go for the trading psychology classes, they get 10 one-on-one sessions with me where we learn to reduce risk. We learn to find strength in the market in a bull trend and the weakest ones in the bear trend, and accordingly, find winners, try to and how to trail your winners, which is very crucial. And also on a lot of trading discipline is also covered in this. So those who are interested, the link is there in the description box. Go through it. And if you have any doubts or queries, shout out an email to me and I will respond to that. Now let's go back to the data of TCS and what it's telling us. So in the futures data in the last 5 days, there is nothing significant from TCS at all. In the last 5 days, we saw the IT stocks first do a sharp move up, then a sharp down, then again a sharp up in a range, keep moving upside down as they were, because of the way Bank Nifty was behaving, they were managing the Nifty move. But TCS has been a complete non-performer from that angle. It's been the other IT stocks which are handling it. Even in today, that is June 15th, today's expiry day also, and after the FOMC meet also, there's no impact on TCS at all, being completely flat, no change, hardly any insignificant numbers anywhere. So no major direction from the future data. Now let's have a look at what the option data is telling us regarding support and resistance. Yeah, so in the option analysis also, we can see very clearly, like what I explained in the monthly, weekly charts, that there is no confidence among the put writers. You can see there is hardly any put OI buildup out here, while the call OI is tremendous at 3,300, at 3,400. Nothing on the put side. Very small additions happening today, and this because it's so close to the money. At the money, this could also be some more of a buyer's scene than a writer out here. Below that, yes, there is a significant zone out here. There is a significant zone out here. But overall, the option data from TCS point of view, not so bullish at all in the extreme shorts. Now let's go back to the chart and try to see what the charts are further telling us and how could one go ahead. So now let's have a look at the hourly time frame. And here also, if I just close the Ichimoku 1 second, you can see the stock already did in a lower time frame a head and shoulder breakdown. This one target is achieved out here of that breakdown, and now consolidating after that zone in this area. Once a target is achieved, stock tends to consolidate. So In the higher time frame, making one slightly preemptive in nature right now, very early stage, but in the lower one, already done. But also in the lower one, what I can see out here is a kind of a rounding, you know, top formation. The only bullish part of a rounding top is that it's more lethal when formed after a rally, not after a bottom. So we can ignore this small issue for the time being, that whether it is capable of doing any damage at the current juncture or not, you know, like that. But it is there. It's not something I can just ignore. But clearly levels are very, it's not so convincing like in the last video when I had made Infosys, which was more convincing. This one is in future. Kumo is bearish, full setup for a downward move with fractals out here and a fractal out there. Now let's go back to the daily chart and try to reassess. So for the upside, like I mentioned, that level of 3,200 250 is very strong. Because in the daily time frame, I have a probable head and shoulder. For me, the stock will become, you know, could be some short covering only if it can sustain above this daily baseline of 3275, and that's the first line of resistance. Above that, the next one is at 3375, which is also the monthly baseline, 3375. So till then, the stock could be wobbly, could not probably be one of the major performers if IT index goes up. TCS, I think, could be lagging until these levels are taken out. Now let's talk about the probable downside if it does something from an investor's and also from a trader's point of view. Now, in the monthly, we spoke about the range of 3,000 to 3,050 to 3,200. In the weekly also, if you see out here, there is a minor support at 3,200. If that breaks uh, again till 3,050, same like the monthly. In the daily also, it's the same scenario, that if this level of 3,195 cracks, it will not fall immediately, tumble down immediately. It will take its time because the future Kumo in the daily is still bullish out here. So maybe a few this fall, if it were to happen, will happen with a gap down, or there will be some consolidation distribution taking place like this in it. If the 3,200 level is broken, okay, if it lingers around that also, they will wait for the future Kumo to turn bearish before it tumbles down further. Now, where can it go to? The first one level was the 3,000 odd level, where we have the Ichimoku monthly support and even the quarterly chart support somewhere around there. So that's one level I'll be looking for in it to, if this were to break. And if supposing something further breaks down in it, then if by chance it does not hold this level, then the next major support, psychological point of view, below the level of 3,000 is the cloud support at 2,800 odd out here, which is the quarterly baseline. Because quarterly charts will be assessed every three months, further breakdown could bring it down to 25,2600, where it also has a gap up made back in October 2020. So those levels I would be not looking at right now from a trader in any point of view. I would like to take it level at a time. For me, this 3,200 and 3,000 are more crucial than those lower levels from both as a trader and as a investor point of view. I would be looking at it in that angle. Now, let's go back to the daily and try to assess if what can be a support at this zone of 3,000 in case we see a breakdown, which, like I said, again, I'll repeat, might not happen so fast, could take its time of distribution, or it has to come with a gap down because of this future Kumo. It needs to turn bearish for a sharper fall down. Okay, so I could spot two things out here, which is the harmonic pattern, which matches with the Ichimoku support levels. But I'm not going to again suggest any preempting, nor am I going to preempt this based on that. Harmonics is all about reversal, not about trading towards a target, for everyone's information. So there is a alt shark in it at 3040 in case it comes down. This would be a level to buy. As a trader, as an investor, I would be looking at this particular level. The other harmonic pattern which I could spot out here, which also is more or less close to this, the potential reversal zone of that one, is a crab. This was the alt shark. Now the other one is a harmonic crab, which is at 3080. So 3080-90 to 3040, that zone could be a phenomenal zone from where the stock could either give you back a bounce in case of a breakdown of 3200, or you could make it a major bottom formation. Whatever takes place will there. Failure to hold these two harmonic patterns and that Ichimoku support, which is all inclined, then we are talking about 28 to 2500 in the stock. On the other hand, if the stock manages to push its way above first 3275, 3250 odd, then 3375, then it's out of the woods, then we can say, yes, the projection on the upward is good. From an investor point of view, one who's looking to do a SIP in the stock or buy in bulk, I would say that should be done in a scattered manner, not so aggressive at this current level. From a trader's point of view, I've just shown you the supports and resistance, but disclaimer, this is not a trading or an investing advice. This is a purely educational video using Ichimoku and harmonics. Please do your thorough research and study before attempting any investment or trading decision, whichever study you do, technical, fundamental, derivative, or astro, whatever you like, please do it and then come to a conclusion on it. I hope this video is of help to you. So please do like it and share and subscribe the channel also. Until then, happy investing.